Welcome to Earnings Central. In this video, we'll break down Lifecore Biomedical's second quarter fiscal 2025 earnings. We'll cover key financial performance metrics and dig into insights from the earnings call. All right, let's go. Starting with top-line revenue, the original estimate for Q2 was $29.75 million. The company actually reported revenue of $32.56 million, surpassing expectations by 9.4%. This quarterly revenue also marked an 8% increase compared to the $30.15 million reported in the same quarter last year. Moving to adjusted earnings per share, the original estimate for Q2 was a loss of 29 cents. The company actually reported a loss of 25 cents, exceeding expectations by 4 cents per share. However, this result reflects a 64 cents per share decrease compared to the profit of 39 cents reported in the same quarter last year. Now, let's dive into some additional performance metrics highlighted during the earnings call. First up, Lifecore showed solid improvement in their gross margins compared to Q1, demonstrating better operational efficiency and a favorable product mix. The company pulled in $32.6 million in revenue for Q2 fiscal year 2025, with adjusted EBITDA hitting $6.5 million, a nice bump up from the previous year's $5.4 million. But what really caught my attention was their financial maneuvering. Lifecore successfully completed a $24.3 million PIPE offering, bringing in fresh capital from both new and existing shareholders. They also scored a huge win by extending their BMO credit facility for another 3 years with better terms. These moves have seriously strengthened their balance sheet and given them more flexibility for growth. Speaking of growth, here's something impressive. Lifecore has expanded their manufacturing capacity to handle approximately $300 million in annual revenue. This is a massive step up and shows they're preparing for significant expansion. Now, let's shift focus to some of the key insights and takeaways from the earnings call. Lifecore currently has 10 late-stage programs in their pipeline, all with potential commercial approval by 2028. Even if only a few of these cross the finish line, we're looking at substantial growth potential. One of their biggest recent investments was installing a new high-speed 5-head isolator filler. This isn't just any piece of equipment. It's state-of-the-art technology that can handle vials, syringes, and cartridges, effectively doubling their filling capacity. This kind of flexibility is crucial in today's pharmaceutical manufacturing landscape. The company's business development efforts have been incredibly active, with over 50 new opportunities in their pipeline. But here's what really stands out. About 30% of these opportunities are with large pharmaceutical companies. This is a huge jump from less than 10% previously and shows they're successfully moving upmarket. To support all this growth, Lifecore brought in Thomas Goldiger as their new Senior Vice President of Operations. His CDMO experience and background in both operations and finance should help drive productivity improvements across the organization. Looking ahead, Lifecore has set some ambitious targets, including a 12% compound annual growth rate for revenue. They're pursuing this through a three-pronged strategy: maximizing existing customer relationships, advancing their development pipeline, and aggressively pursuing new business opportunities. What makes their strategy particularly interesting is how they've expanded their focus. Historically, Lifecore was known primarily for complex, highly viscous formulations. Now they're broadening their scope to include various products and formulations across multiple modalities. This wider net should help them capture more market share and diversify their customer base. From a market positioning standpoint, Lifecore is clearly transforming from a specialized CDMO into a more comprehensive pharmaceutical manufacturing partner. They're making all the right moves, investing in capacity, strengthening their balance sheet, bringing in experienced leadership, and aggressively pursuing new business opportunities. The combination of their financial strengthening, operational improvements, and strategic expansion plans suggests Lifecore is positioning itself for significant growth in the coming years. While there are always execution risks in scaling up operations and bringing new programs to market, the foundation they're building looks solid. That wraps up our recap of Lifecore Biomedical's second quarter fiscal 2025 earnings. If you found this recap helpful and want to stay on top of more earnings reports from other companies, don't forget to subscribe. We've got plenty more quick and easy breakdowns coming your way. from Earning Central.